Um, you need to find the purpose of the project if there is a purpose. So if you're looking at a project, a lot of projects now, like Bitcoin, was mostly just, like exchanging funds, like taking
Yeah, you
your
got a concept
country's,
about money. Yeah.
yeah, taking your country's currency and then making it into something else that's decentralized, and then being able to trade among ourselves in a way that's much more free. So these days, though, there's usually a project behind the coin. So like if you're investing in it, like you're investing in a stock, what company are you investing in? You're investing in Tesla. What is Tesla doing? Are they making boats? Are they, like, I don't know, shearing sheep? Like what is this? What is the idea behind the business, behind this project? So
Which I think is also a really good point to make about establishing what your personal values are before you start buying crypto. Like, what are the things that really matter to you? Just like when you're buying any stock, like, what are the things that are important to you when you look at your investment portfolio? Do you want to be backing companies that are giving back to the community? Do you want to be investing in projects that are only interested in environmentally friendly practices? Are you, what is your own moral qualifications, and what are the things that matter to you, so that as you look at these projects, and sometimes that's how you learn it, is as you look at the projects, you realize what you don't want, and you can then start to shift toward projects that are what you do want. And that's going to vary from every person. So Great Aunt Bertha is probably a different generation than you are. Maybe she doesn't have kids and you do. Maybe she's willing to take less risk and you're willing to take more, or vice versa. She's only got like 10 years left on the planet, and so she's gambling whatever. She's like, who cares? And so it really is looking at, okay, what are my values compared to this person that's pitching it to me? And is this in alignment with where I'm headed? And that starts to weed out the projects that you're willing to put your money behind, regardless of whether or not Bertha thinks it's going to go, to the moon and 100x or.
yeah. And you can find all this information on these projects. It's should be very, very simple. These projects will usually have a website. Mm-hmm. They will usually have a Twitter. They will usually have at least some sort of social media, maybe a Discord channel that you can join and ask questions and talk as you're going through your research, and you're like finding like maybe glaring things that you're like, I don't know about that. So then you can go right to the Discord and you can ask the developers, be like, what is your solution to this problem, XYZ? And they can respond. And if you don't like the answer, then you don't have to invest. Like, you don't get to do that with stocks. Like, you don't get to do that with Wall Street. So is it another reason that this is so unique. Right. Sometimes the project is like a small cap project will be on a blockchain that already exists. So like Ethereum, for example, like you don't necessarily want to invest in Ethereum. Say you think you're already priced out because Ethereum's already $2,000, $3,000, $4,000 a coin. There are ways to get into that. We'll touch on that in a minute, but there are projects that are building on the Ethereum blockchain to solve some of the scaling issues. So it's expensive to do business on Ethereum. If you purchase an NFT, you have to pay something called a gas fee, which is can be rather expensive. It's kind of like a tax. You're paying the,
yeah.
I mean, it's a. Jen,
we did a short on this.
And we did. That's right.
Yeah. So go find that and it'll explain what gas is.
Yes. So imagine it for this conversation as just like a tax. Like you have to pay it in order for your transaction to go through.
It's when you go to the restaurant and you have to tip the waiter. Like it's just that's it's an extra part of the price. Yeah.
Yeah. So if you buy something for $100, there might be another $100 gas fee on top of it. So you have to pay $200, which is crazy.
Super lame.
Yeah,
Well, it's not like we're paying for the miners to do their
sure.
jobs, which is really
Yes.
important.
Yes.
And it's gotten really expensive because Ethereum was the first blockchain to add utility to Bitcoin. And
Yes.
so what the team at Ethereum created, immensely valuable. And those
Yes.
miners do deserve that money, every bit of it, because we wouldn't be where we are today. However, it's really expensive. And if you're doing a transaction that's, a $15,000 transaction, you probably don't care about a $200 gas fee. And there are alternatives, but these are all things to know. And this is a big one. This is a big question I ask. What blockchain are they building on?
Mm-hmm.
And what is the project? And does it need a fast, cheap, reliable blockchain? Okay, well, it's
Yes.
not Ethereum.
Yes. So, like, say, for
Yes.
example, you have Polygon right now that's building on the Ethereum blockchain that is aiming to make Ethereum much more scalable. And the way that it operates in such a way where it makes transactions much less expensive. So, like, me, who is not doing $15,000 transactions on Ethereum, I'm doing maybe $200, and sometimes it's even less. Like, I have $20 of some coin left over. I just want to convert it. I have to pay $150 in gas fee just to do that. I'm not going to do that. So if you're looking at Polygon as an investment, you think, okay, well, I'm investing in Polygon, but I'm also indirectly investing in Ethereum. Does that align with my morals?
Right.
So that's something that you need to consider as well as you're going through, as like, what blockchain is it on and how does that work? Do you think that blockchain is going to be successful, or are you one of the people that thinks Ethereum is going to be phased out in the next 5 years and something else is going to take its place? So and whether that's going to happen, I don't know, but there are people out there that believe both ways because it is expensive and people are getting tired of paying those fees.
Well,
So,
and the other thing, right, and that's another thing to think about that I want this team evaluating, because if you're beholden to the Ethereum developers, okay, well, then what happens to your project 15 years from now after you've built out a community, you've coded all of this stuff, and you're relying on somebody else's development team? How much risk does that put you at?
mhm.
And is there a place in your roadmap that you're transitioning to your own blockchain? And so when I'm looking at their roadmap, I want to know, and back to Hannah's point, this is something that you could go into the Discord channel and you could ask the devs. And if their answer is, oh, I don't know.
Or
Okay,
they're really rude.
right. Or they're mean about it. Right.
Right. Like,
Absolutely. That's a point to note of, ooh, that didn't feel good, that they either haven't considered that, they're angry that I'm asking the question, or they are ignorant to the idea that Ethereum is going to go away. And so they're choosing to not look at a potential risk.
mhm.
And I'm not like, I don't need them to necessarily change their plan, but I want that to be part of the conversation that they're having internally as a project of, okay, you guys, as we move forward in development, which as they move forward in development, ideally my investment is going to grow because it's a company that I want to move forward. I need to make sure that they're thinking beyond where they are right now and just, oh, we're going to raise $100 million because we're going to sell all of these coins, because the coin's just going to go up because we said it would.
Yeah.
There's got to be stuff happening. And this is what we're seeing with like Cardano. They've been promising a lot of things that just aren't happening. And the token holders are getting really frustrated. And so they're coming back to the developers and saying, look, you guys have promised us stuff. It's not getting developed on. We're getting like passed by these other projects, and we believe in you, but what are you doing? And so having that direct access to the development team is a really big deal. I can't call Elon and ask him what's going on at Tesla. Like
Mhm.
I would, but I can't.
Yeah, he'd
And
be like, "What?
so
What do you
that's
want?"
a big deal, right? And to have that level of accessibility to your team in the beginning days of these projects.
A lot of these a lot of this information too, and then which is the next point, is on the white paper.
Mhm.
So if you don't know what a white paper is, it is a when someone develops a project or a cryptocurrency, they write down how it works. It's
Like
just
a business plan.
it's literally like a Word document. Like, it's not complicated. It says we are going to make these many coins. This is how they're going to be distributed. This is the time frame in which they're going to be distributed, or maybe they're just all going to be dumped out into the public at once, or it's a very detailed, should be a very detailed description of how the project works, how many coins there are, how they're going to slow the trickle of coins into, they're not just going to dump them all into the public because that could immensely decrease your price, supply and demand. So finding the white paper, it should be publicly available on their website, and I cannot stress enough that you need to read the white paper. If you're
Yeah.
thinking about investing in a project, read the white paper first before you do anything. And if you're like calculating out, because from the white paper you can guesstimate what those coins might be worth at some point
Mhm.
if you calculate out how many coins there will be at X amount of years, and because it tells you exactly how they'll be distributed.
Yeah.
So white paper, super important, but not the most exciting reading material.
No, it's not. And you have to understand too, like a lot of the white papers are written by the developers. And
Mhm.
so if you can imagine reading a technical manual, they're getting a little bit better. They're starting to bring marketing teams in, and there are things called yellow papers, which are usually the one where the dev team starts with and says, okay, here's all the technical stuff. And then the marketing team takes that and tries to make it into a format that the general public can read. But they're girthy. I mean, you're reading a company's business plan. And
Yes.
so, yeah, if you want a way to fall asleep fast, man, grab a white paper every night before you go to bed. And
Some of them are
um,
very succinct. Some of them
yes,
are
which
very
makes me
relatively
nervous,
short.
when I see one. Right, like there's two levels to it. I don't want it to be too short where I'm like, oh, this is totally an MLM money grab, pump and dump, in and out. They're just making up stuff. We're going to donate to the nearest whatever charity and it'll be great. I want something that is in depth. I want to know what their plan is. I really want to be able to read a white paper and know that the team has put some thought into it, which again goes back to team. If you're looking at a team that is well versed and has got some expertise behind them, they're not going to turn out a white paper business plan that isn't thorough, which is not to say that and sometimes if I'm looking at like a younger team that maybe doesn't have a really thorough resume, but then I go through their white paper and I'm like, okay, you know what, I like what they're doing, I like what they're taking on. um and sometimes there are glaringly obvious things that for me, I'm like, ooh, that's a big challenge. Have they thought about that? I'll reach out to the team and say, you guys have got to fix this. And what are you going to do? Or I've seen this in another project. How are you different? What are you going to do to grab market share? Or, you see one that is, we're going to replace Amazon or we're going to replace Uber. And it's like, okay, cool. We need a decentralized Uber, but how are you going to capture that market share? Like, because I'm looking at what you have as your marketing budget and it doesn't match up. And so when we talk about this research, you really have to remember that you're going in as an early investor and you've got to look at this with the same glasses that an angel investor does of, okay, cool idea, bro, but how are you actually going to execute on that? And have you thought about, what's already out there in the market? Have you thought about, what your customers are going to think about? And so it's all of those pieces that really come back to that. But the white paper is a good way to make your list of concerns that you can then go out and say, why does this not exist in the market already? Like, what is the obstacle that they're not seeing? Or if they're already looking at that obstacle, how are they going to overcome it? Like, those are big components to the research.
The white paper might be a really seem like a very boring part of research, but it's super important. You're literally getting the information that you need straight from the horse's mouth. If they're telling you there's going to be 20 trillion bazillion coins released and they're all just going to be dumped into the public all at one time, that's pretty sure, like, for me personally, I'm going to be like, nah, no thanks, I'm not interested in this one. They'll tell you right away whether it meets your criteria, whatever your criteria might be. So
yeah. And how many, another big one for me, like if we're going to talk about tokenomics for a sec, how many tokens are the founders holding?
Yes. And when do they have access to those?
Exactly. Which is just like stocks, right? Like, at what point do those founders get vested? And so it's the same research that you're looking at of, okay, if this is supposed to be a decentralized project, but founders are going to hold on to 80% of the token, that's not a decentralized project. Right. They've got a market maker. They're going to pump and dump it. When are those tokens being released? And so and I know we're talking about really big things here. Tokenomics is really, really complicated, but it matters. Like, these things really matter, and you really want to understand who is holding on to the majority stake of this company. And are they only releasing 10% of those tokens? And in that scenario, okay, then who's the decision maker? And so if they're saying, we want our community to make all these decisions, but you guys are only going to have 10% of the tokens, then that, to me, that's a question. And then I go, okay, so I've read the white paper and I love what you guys want to do, and this would be a question in the Discord, which is, I love what you're doing. I love what you're saying, but then I'm looking at founder token and how those are converting and what that's going to look like. And it's just not marrying up. So can you help me understand it? And again, going back to what Hannah said, the way they respond is as important as what they say. And so it really is, how do they handle community feedback? Because you're all in this together. The community is what's going to drive this project as much as team.
Yes, I agree. So white paper, possibly super boring. Don't skip it.
Yes.
Got it? Got it. Okay. That's important. That's an important note.
That one more time. Say it one
Don't
more time.
skip reading the white paper. Okay. Okay. All right. That was an important point. I hope you wrote it down. We're not going back to that.
That's going to be the thing we tweet for the next week.
Read the white paper. All right. So the next one, we talked a little bit about market cap, but you kind of want an idea of what the market cap of the project is that you're interested in. Are you willing to take on the risk versus the benefit, potential risk versus potential benefit? If it's a small cap, there's a lot of room for growth, but there's also a good possibility that you might lose a decent amount of your cash that you invested. So, however, when you're looking at a small cap coin, and you're seeing everything, you're liking everything that you're seeing. You're reading the white paper, the team looks awesome, and you're basically like, I'm all in on this project. Like, this project looks awesome to me. It's checking all my boxes. There's still a chance that it could fail. So you just want to make sure that you are comfortable with the amount of money that you put in, because you might lose it.
Yep.
There is no guarantees. There are no guarantees here. So you just want to see, does this have room to grow? And you can calculate out the amount of coins in the white paper. If it got to the price of what Bitcoin might be, what would be the market cap of it? Like, is there room for growth within this opportunity? So that's pretty straightforward. And that's something that you can do on your own because it's just basic math. And once you have the information of how many coins would be available, it's pretty uncomplicated. So you just want to look at that number. Coin market cap, I mentioned it earlier. It's a really nice website for getting an idea of what the current market cap is for certain projects, what the current price is per coin. It'll calculate all the details out for you. In fact, I think there's like a future calculator. So you can say like, what if the price was this, and then it would give you an idea of what the market cap would be for that coin. So it's a really great tool to help make decisions on investment opportunities. So,
yeah.
And
when you're doing that, like, okay, so say I'm looking at a project that wants to be the decentralized version of Spotify. And I do the math on what their potential market cap could be. And it's 100 times what Spotify is currently valued at. You've got to look at that and go, okay, well, is that really feasible? And so then I go, okay, why is the team thinking that they can release this many tokens? Like they need to pull that back. And so think about what industry they're going into. What are the companies that are already in that industry? Compare it to what's already out there. There's only so much money available. Like, yeah, taking out Spotify is a great, ambitious. It's a really ambitious goal. But if it relies on a community being able to buy 3 times what Spotify is worth, is that feasible? And so these are all things to add in there to think about.
I think the last thing is, can I even buy it? Some small cap coins that you might be interested in are not available because of restrictions on exchanges in your state or your country. So that would be something that you would want to check on, because it might not even be available for you to purchase within your means where your location is anyways.
Yep.
So, or you can, and it would just be really expensive to transfer it off and get it to some place. That's a whole other thing. But in general, if you're using Coinbase or Binance or like some place that's available in your state, they only have the most popular coins, and you might not be able to find whatever coin you might be interested in. That's just barely a startup because it's not listed on those exchanges yet. So, yeah, obviously, if you can't buy it, then it's out.
Then you can't. And remember, if you can't buy it, you also can't sell it.
Yeah.
So you really want to think about, and I think we're going to talk about this too. What's your exit strategy? And if you're really limited to the places where you can purchase it, again, that goes back to higher risk, because Aunt Bertha is probably just buying stuff on Coinbase. So by the time it gets to Coinbase, again, it's farther down the road. And so the risk is lower. Once Coinbase is listing it, they're also doing their research into, are we going to make money on this? And you have to remember that exchanges are in it for the money too. And so they're looking at all of those pieces. It is really hard to get some of these tokens. I mean, just as somebody who's gone through the process of getting a token listed on an exchange, it's incredibly hard to get them listed on there. And I think Hannah's going to do some shorts coming up about decentralized exchanges versus centralized exchanges. And so we'll talk about that in future episodes, but that's a big deal, like the accessibility of it. And we've seen projects, oh my gosh, time and time again. And I'll just poke Ripple because I don't like them. But, I mean, for a while, you couldn't sell your Ripple. And so here you are holding a coin, and the SEC got involved, and there were a lot of scenarios where, we've seen coins get pulled down off of big exchanges, coming off of Binance. And, you never know when there's going to be a controversy or legislation, which is, for me, humongous, what country that project is operating out of, because countries are still continuing to decide how they want to legislate crypto. And so for me, that's a big one on whether or not the team's done their homework. For me to be able to decide, whether I'm going to invest in it or not. And so we see the US making decisions left and right now, about how they're going to regulate crypto. And there are a lot of exchanges a lot of token sales that we can't participate here because the projects have just said, nope, not going to touch it. I'm not even going to open it up to the US or Canada, which is unfortunate, but right now that's where we sit with it. So it's good to know. It's really, really important to know.
So once you've done all of this, like researching, you figured out, you found something you want to invest in, ABC token, and you're good. Like, you're like, I'm ready to go. This is something, I don't even know if there's an ABC token. So don't.
Right. That was not there. Probably, if there wasn't, there is now. Way to go, Hannah.
So you've decided that's the token you're going to invest in. That is the coin that you are interested in. So then you have to decide how much money you're going to invest. And that's totally up to you. We cannot tell you that. You have to decide that for yourself. Okay. And there are different options in investing, as far as like, you have to think about, okay, is this a short-term flip? Am I going to own this for a couple weeks? And then, like, I think this is a pump and dump. So I'm going to jump in now and I'm going to get out with the people at the top. And then I'm going to leave everybody holding the bag. Like, I don't think that's real cool, but people do that. So that is an investment strategy. Just put it out there. Are you going to buy a certain amount of coins and hold them for the next 20 years and then you're going to retire early? Is that your plan? Are you just going to put them away in cold storage and not think about them again? And these are things that we cannot tell you what to do because I don't even know if I'm making the right decision in this aspect. So
same.
There is a thing called dollar cost averaging, which is something that I would highly recommend for someone who's new to this.
Oh my gosh.
And it's basically,
I still use it. It's
all the time.
It's a great way to go.
Yeah. So places like Coinbase or Binance or crypto.com, exchanges like that, you can set up where it's linked to your bank account, and every payday or every Friday or once a month, you can set it up however you want. It automatically purchases a predetermined amount of whatever crypto you want to buy. So like for me, I have one that is a small cap, and I am confident in the project, but I'm also on a budget. So I'm not going to jump like $10,000 into it right now. One, because I don't have $10,000. Two, that's just not my style. So every single time I get paid, I have a transfer that happens on the exchange where they take $50 out of my account and they turn it into $50 of this coin. So I'm just slowly every 2 weeks stacking. That also allows me to not have to worry about buying low ever. So sometimes I get a higher price because it just buys it at whatever price it's currently at. So sometimes I get a higher price, sometimes I get a lower price, sometimes we're in a big dip and like I feel like I'm getting quite a bargain. It's getting like 2 times the amount of coins that I was 2 weeks ago or whatever. Like right now, I'm really happy with the purchases that I'm making because everything's on sale. It's great.
It's fantastic.
Yeah. So you need to consider how much and how quickly and what type of investor you are. I'm not a day trader. I've said that in our last episode. That is nope. Too much anxiety for that. I am a long-term holder. I'm dollar cost averaging. I just let it do its thing. That is So, I mean, as far as those two questions go, you just need to make sure that you're making the right decision for yourself. And that might be different. That will be different for everybody.
It will be different for everyone.
Yeah.
And I think also you can look at different investments with different time horizons. And so, when I got my mom investing for the first time, her time horizons were obviously really different from mine. And so I weighted her investment differently because she wanted to have, a bigger amount, right? We went to the tried and trues. And so she had a bigger amount in the large caps and a smaller amount in the small caps, where a younger investor who's willing to carry more risk is probably going to turn that upside down. And you can have different time horizons for different projects. It's not all, okay, I'm going to have this one strategy going forward for everything. But with dollar cost averaging, I heard a statistic when I got started that was, and I can't remember the number, but if you had dollar cost averaged Bitcoin, like you would have outperformed by like 1,000 to 1 most traders.
Yes.
Because it's just so hard to time the market. And if we look at last year, right, everybody was hodling Bitcoin to $100,000. And a lot of people were relying on charts. They were like, no, look, we've done all the research. According to the chart, there's no way Bitcoin's not going to be at 100 grand. And so there were a lot of people that were trading that had done this research, and you know what? They were wrong. And so right now, where we're still looking at a technology, it's very much in its infancy. That countries are still trying to figure out how they're treating this and what we're doing with it. Even the guys that are day trading and are doing all of this research day in and day out, they're still wrong. And dollar cost averaging in beats them. And so if you are willing to just, to me, it also is way less stressful to do dollar cost averaging, because you don't even have to know what the price is. You don't even have to know if your portfolio is red or green. You just buy that money every time based on what your time horizon is and how much you want to invest. And for me, I did the same thing. Like I would say, okay, every month I'm taking 3% of my paycheck, and that is my investment fund. And then I would sit down and I would look at what I was holding, what I'd been researching, and I had that money set aside. And I would then make my individual purchases based on things I'd read, legislation that I saw happening, and my dollar cost averaging outperformed those individual decisions every time. Every single time. And the cool part about it is you all go in and like open up a wallet, and I'm like, oh wow, I'm like, I have a ton of coins. Like I had forgotten that I've been DCAing into this project for the last 3 months, and I've caught all these sales. I haven't been paying attention to the coin price. And yay.
Well, and you know what's great is when you have a bull run, you forget that you've been DCAing on these coins, right? And then all of a sudden, pretty much all of crypto, the entire, like every single coin is going up and it's in the green. And you're like, awesome, cool. And you like open up your crypto.com or your Coinbase or whatever, wherever you're keeping your coins. And you're looking at it and you think, wow, okay. Like that was a small cap. So, like say you got like, 10,000 coins or 100,000 coins or whatever, because they were super cheap and what you did your research and you've got all this stuff, and then a bull run happens and everything's going up, and all of a sudden instead of $700 you got like $7,000.
Yeah.
And you're like, holy crap, like this is real. Like the thing that people talk about, like you hear this, like people talk about it on Reddit and on the internet and stuff, but like it's like happening, like it's cool. It's just very cool because you forget that it's happening in the background, and then you log in and you have 30,000 coins. And hell, if those 30,000 coins all went to like $1 or like $10, like if that's a possibility, yeah, just keep DCAing. Just wait.
Like, it's really exciting, which this is also a reminder that if you have a long time horizon, please don't leave them on an exchange.
Yes, we talked about that last time.
Pull those into a wallet.
Please re-listen to the wallet episode if you need to.
Please.
So then that brings us to exit strategies.
Yes.
Which are important. At what point do you decide, all right, I'm rich, let's quit.
Let's go car shopping. That's what happened at my house.
Let's pay off the mortgage. Let's talk about the house we're gonna buy in the Caribbean, or whatever. Yes. Whatever your goals are. Mine, I would just love to pay off my mortgage someday. That would be fantastic. If I could do it early, that is great. If I do better than that, then I am just going to be absolutely peachy keen happy. But I'm just hoping not to lose a ton of money. I mean, in reality, that's the goal.
Yeah, right.
So you have to decide. Possible. You have to know beforehand what your goal is.
Oh my God.
Because you could make $1 million in your wallet. And then if you sit around and if you get a little greedy and you think, I can make another, this is still going up. All of a sudden it drops back down to where it was. You are no longer a millionaire, like there's a huge bull run. And then all of a sudden it's followed by a bear market and you're done. That's it. You were a millionaire. You never realized it because you never cashed out or took any profits. And you're back to exactly where you were before, wishing that you had cashed out some of that money to take care of maybe day-to-day responsibilities or making life a little easier or paying the rent or whatever it was. You'll never realize
reinvesting in that project.
Yes. But it's not real money until you take profits. Yes. So whatever that means, whether that means converting it to another cryptocurrency and reinvesting it, or whether that means cashing it out and putting extra principal on your mortgage or buying a new truck or whatever it is, you're never going to see it if you don't actually do something with the profits. You have to actually take that step. So you have to decide how you're going to do that. Are you I'm in it until retirement kind of person? You're just going to wait it out for 50 years because in your mind, or 30 years or 10 years, however long it is, like in 10 years, we're definitely going to be higher than we are now. That's your thought process. So we're just going to put it away and not think about it for a while, and then cash it out. Or is this a situation where you're thinking, I'm going to put this in until it hits $5 and then I'm cashing it out? Whatever your exit strategy is, don't change it. Whatever your plan is.
Don't get emotional.
Yes. Whatever your plan is, stick to your plan. Don't decide halfway through that you want to do something different or that this isn't enough. You get a little greedy. You see that you made $150,000 on an investment. Wow, that's great. You think you can make 200, just whatever your plan was. Right. If your plan was to cash out at that point, cash it out.
Your rules and stick to it.
Yes.
And a really great strategy is the same philosophy of DCA. And so take profit on the way up. Mm-hmm. And so as the project is doing really well, maybe at the end of every year or every June 1st or, before the family vacation that you guys, traditionally take every September, you cash out 100 coins at whatever that price is. And so you can do things the same way of the DCA, and you just set rules along the way of when this coin goes up 8%, I'm going to take out 10%. And it doesn't have to be binary. So it doesn't have to be, I'm either in or I'm out.
Mhm.
You can use the same strategies, and it's just like your retirement.
Yep.
So what's your plan for retirement? Are you going to, the day you retire, are you cashing out your whole 401k? Or are you going to take a little bit of monthly salary? And so it's the same thing. Like, crypto is just another part of your portfolio. And I think that's the way to look at it. It's obviously more high risk, but how do you treat those high risk investments in your normal portfolio?
Yes.
And I think it's remembering that this is part of that overall strategy, that overall portfolio. It gets really exciting during a bull run. I mean, it's exciting when the stock market goes up too, but the stock market goes up like incrementally compared to what crypto does, which is why there's so much hype and excitement and fear of missing out. And so it really is not making emotional decisions, just like the DCA, where you go, oh my gosh, instead of doing the DCA, I'm going to go ahead and, I've got this whole rent payment that if I can put that in, and then in the next 2 weeks, it's going to quadruple. Why wouldn't I do that? And so I think that's the big component, is how do you look at it? Yay. Hi.
I'm sorry.
It's awesome. This is the part of Hannah and I that you get to know, that we're just moms figuring this out. So set rules. I mean, that's the big thing. And just, it's really easy to get emotional with this. And, I mean, the biggest thing I tell people when they get started is take a small amount and buy something and watch it go up and down and up and down and up and down and up and down and up and down for the next couple months, because you'll find out real quickly what your risk tolerance is, because it will either make you sick to your stomach or you'll be really excited. And so, these are risky investments if you're in the small caps. And just like any roller coaster, it can make you want to vomit.
This is correct. I think you just reiterated what I had said, basically. I mean, you just gotta stick to it, man.
Yeah, 100%.
Like, you just gotta have a plan and you gotta stick to it. So it's, if you have that overriding plan, that overarching plan from the very beginning, then you know where you're headed. It's not complicated or confusing. When you get to that certain percentage or dollar amount or age or date, then you can just, call it good and take your money and maybe get a babysitter. Your baby comes out? No, my baby's still in my belly. So I think with that,
yes, I think that's a great place to end. Stick to the rules. Stick to the rules, and do your homework and read the white paper.
Yes, read the white paper.
Yes,
because I mean, in the end, this is what we're doing it for, right? Like seriously. We are shooting for generational wealth here for our kids to be more comfortable than we were, or than we are. So
yes, all of that.
Yeah, read the white paper, stick to the plan.
Yes,
do your research.
100%. And none of this was financial advice.
Yes, that's true. Just all right. Thanks, guys, for hanging out with us again. All right. We'll talk to you soon.
Bye. That wraps up our conversation for today. If you have any suggestions or questions regarding this episode or any others, please let us know on social media. Thanks for finding the time to visit with us, and we hope to chat with you again soon here at Cryptocurrency.